The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. And at the break, we're going to have Rich Anderson on from Anderson Capital Management. Rich is going to talk to us about some of the big changes that have happened for futures commissions brokers regarding margins. It affects everyone that does any trading in the commodity markets. I believe it affects people in the stock market, but I'm not sure. I know it affects the people in the commodity market because a lot of information is coming out on it. Well, folks, I want to tell you a story. You heard it before, but I'll tell you again. About 22 years ago, I was trading with Bryce Gilmore in Pismo Beach, California, and because he was Australian, he couldn't have a U.S. futures account, and so he was using my account, and he wanted to sell Treasury bonds, and he said to sell Treasury bonds at 101.02 and put a stop at 101.03. And I said, Bryce, that is the most ridiculous order you could ever do. I said, that's nothing. I said, they'll take that off in a second. He said, put the order in at 101.02 and put a buy stop at 101.03. And I said, that's suicide. No, it's not. He said, if it hits 101.03, I'm going to take all of these books and I'm going to walk down to the Pismo Beach Pier, throw them in the Pacific Ocean, and go back to selling exotic cars in Australia is what I was doing before. And I said, well, if you feel that strongly about it, that's what I'll do. Well, I put the order in at 02, and it took almost all morning to finally get filled at 02. But instead of putting a stop at 03, I put the stop at 08. I had to give it a little bit of room. That's a principle that I have to believe in. So I never told him that, but I told him later. But anyway, they never did hit 03. 02 was the high, and he never told me why. And I just didn't know, didn't know what happened. But anyway, they kept going down and down and down. Boys and girls, I have all of my books packed. They are packed up and ready to rock and roll. I'm going to throw them in here to the Delaware River here on the East Coast this afternoon. If we close above, 2230 in the S&P, something like that. I'm going to post a bunch of charts in here that I'm looking at. These are long-term charts. The first one I'm going to put in is the long-term weekly. You can have them, but there's only about 3,000 books. It's a very big box. I'm going to put the first one is going to be the Nikkei Dow. And as you can see, this market has completed a perfect three drives to a top pattern. We're making a double top from where we were back in 2007 when we made a butterfly top. But this top that we've just made here with this financial planning that they have going on at the BOJ, it took the 7% that Nikkei went up in just 2 days to get to that level. So that's going to be one of the charts that we're going to be looking at here, folks. These are all patterns. I don't know diddly squat about the fundamentals. Never have no interest in it. All I do is look at the charts. Sometimes they win. Sometimes they look. I think there's going to be a crash coming because everything is set up. It's got to happen soon. I just keep watching it. But today's a really critical day to be watching these things. Now, the next one I wanted to put in here is the same chart, only it's a daily chart of the Nikkei Dow, and I want to put that in so you can take a look at that one also. I hope I can do that. Just give me a second. Yeah, I can do that. There we go. And then you'll see that it's completing a three drive to a top pattern on that same basis, only a much smaller level. So you're seeing the three drive to a top on the long-term weekly, and you're also seeing the three drive to a top on the daily. It's also doing the 1, 2, 3, 4, 5 expanding wave triangle. So all of that is all coming together at the same time, which is very, very unusual. We're seeing it in so many things that it's just really hard to believe. And the next one I wanted to show you is the okay, where is it? Hold on one second here. This is what I wanted to show you. This is what really doesn't make any sense to me. I hope somebody smart can explain this one to me, because we have ETFs that we trade for Japanese shares, correct? So I went and looked at EWJ, which is the ETF for the Japanese market. And as you can see, the ETF didn't even take out the June highs. The actual market took out the highs from 2014 and made a 1.27 expansion of that. And they did it on big volume. And then, and after being up there for 2 days, hanging there on record volume, the ETF, the EWJ, gaps down sharply. Almost 10% from the high. Now, explain that to me if you're an ETF holder. I mean, you're buying something in Japan. They have everything in the world saying they're going to buy 8 trillion or 27 zillion Zimbabwe dollars, whatever it happens to be. And then the market is now sharply lower. I mean, I don't understand that. I know what ETF stands for, but unfortunately, Mr. O'Brien won't allow me to, to say what it means. But I'm sure you can guess what the letters are. But we'll have to see what's going to be happening. Someone asked me a question if I had any of my books are related to commodity or to computers, and I have a Microsoft for Dummies. I think it was the first one they put out, and I couldn't do that, so I kept the book, but I've not been able to look at it. The yen has gone up to that. That was the next thing I wanted to bring you to show you that we went up into that zone that we were watching just just last week. 1 second, and I will get that here. I'm working off my laptop, and sometimes I can't get these darn things up. Before I do that, I want to get into some of these stocks things, because we've got Rich coming on at the break, and I want to show you all of these patterns that we're looking at in the stock market are really quite amazing. Here's the one on the Dow Jones Industrials for the futures. It's doing the same thing that the regular Dow Jones is doing. It's another 1, 2, 3, 4, 5 expanding triangle. I've never seen this many expanding triangles ever in all my years. Even in 2000, when the market was topping in 2000, I never saw them this many that we have going on at the same time that we have them going on right now. It's just truly amazing. Now, the next one I wanted to show you would be the ETF for the QQQ, which is the Nasdaq, and you'll see that that's also completing. It's not quite there yet. All the others have made it, but the Nasdaq is for some reason a little bit weaker than the market. I don't know if it's related to some of these high-priced stocks that we have, like Baidu and a few others. It really makes you wonder if some of these stocks are so expensive that they float the average. They get it to areas where it gets to, and then it just sells off quite a bit. But if you'll see the chart of Baidu, you'll also see the 1, 2, 3, 4, 5 expanding triangle pattern that we're looking at on everything else. This is also apparent in a lot of other things, but it's certainly apparent in these New York Stock Exchange stocks. And the next one I wanted to show you is the Dow Jones Utilities, and that also is doing the same thing. It's making a big butterfly top here on the daily charts, and get that in here 1 second here, and we'll get this ready. There we go. And you'll see that we made a 1.618 expansion here on the Dow Jones Utilities, and it continues to go higher. Then we're going to do the transportation. 1 second here. Someone asked the question if the T6 pattern that Gartley talked about, the T6, which stands for triangular 6, does anything with time. No, it does not. You can do some daily time counts and stuff like that, but I really don't know if that really means very much at all. I'm just basically looking at the time and price patterns because, when you do your trade, when you have your equity run, it doesn't show a time factor on your equity run. It only tells you whether you're winning or losing, and it doesn't tell you, how much you're going to make. It can tell you how much you're going to lose because that's what your stop is for. But that's really what you're looking at. These are just all long-term patterns, folks. I don't have enough time today to put them all in, but I cannot find one that even begins to look bullish. Well, there is one, and that's the HUI and the XAU beginning to look real interesting here, but not quite yet, I don't believe. Now, I'm going to put the most important one in that I think is the most important. This is the one that I'm basing almost all this stuff on. And you'll see that this is the real market. This is the New York Stock Exchange Index. If you'll notice that we had a divergence in July, you'll see the green line there with the two little red dots. We had a divergence then, and the market broke down. As you can see, it went up into new high ground. We made a double top in the New York Stock Exchange Index. The Dow made a new high. We had another divergence in September, on September the 22nd, after we made a high on the 3rd. And then we came down, broke very badly. And now what we're doing now is we're making a 786 retracement. This chart was done last night. And all we've done so far today is we took out yesterday's high by 6 points. Yesterday's high was 10,824. And today's high so far, of course, is 10,835 by just 11 points. And that's less than 1/100 of 1%. So it hasn't even made the 786 retracement yet. This barely took out yesterday's high with all this bullish enthusiasm that we've had so far. That doesn't mean it's going to stop. I'm just telling you this divergence, that we've seen it twice. We've never seen that before. And now we're seeing it for the third time. Maybe we'll see it for, maybe we'll do it Joe DiMaggio. Maybe we'll see it 56 times. I don't know. This just means a lot. This tells you that the market isn't nearly as bullish as the bozos, I shouldn't say that, as the people in the know are telling us. That's what it looks like to me. There's a massive distribution going on in here, but the distribution might be me, because if this thing breaks into new high ground, all these books are going, baby. That's all I can tell you. Live fast, love hard, die young, and make a good-looking corpse. That happens to be the motto of the Navy SEALs. It comes from a movie with Humphrey Bogart called Knock on Any Door, where he starred with John Derrick, and John Derrick was most famous for his wives, Ursula Andress, Linda Evans, and Bo Derrick. Those were his claims to fame. Anyway, that's what we're looking at right now. We've still got the Dow up on the day, looking pretty strong. The real interesting part about this, folks, is we don't have to get down very much to get a weekly reversal. If the S&P is closes below, and the futures close below 2006. It's trading, 2020 and change now. If it closes below 2006, that's going to be a weekly reversal. In other words, that it's going to be down on the week from where it closed on the 31st, which was that New Year's Eve surprise that we had. So that's really, really where what we're looking at here. So below 2006, we'll see. We got to take a little break here to pay some bills. So if you have any questions, it's 877-927-6648. Rich Anderson at the break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and we're going to talk a little bit about gold and silver in here. I've posted into Tiger TV the long-term monthly silver chart going back to 1972. Silver was trading at about $3.25 an ounce. The low in silver, when it first started trading, was about $1.32 an ounce. That was back in 65 or 66, I believe, when the COMEX first started to trade silver. I was trading it at that time, but I don't remember when it started. I believe it was 64 or 65 when we started trading silver futures. We didn't start trading gold futures until 1972. That's when Nixon took us off the Bretton Woods Agreement, basically floated the dollar, and gold could be owned by Americans. And it had been trading at about $100 an ounce in the black market, because no one really turned in. Well, there were a few people turned in their gold coins, but not many. And but so anyway, we were able to own gold in 72. And, of course, it eventually went up to $865, then back to $230, and then up to 1962. I believe we're still in this well, no question we're still in the correction. I thought it was going to stop at 1160, but it didn't. We've gone down to 1137 twice. We hit it yesterday, and then we hit it again today. We've had a little bit of a bounce, but very little. What I'm waiting for in gold is to see the slightest bit of a rally up above the fib number at 1170. That'll give me a little bit of leeway as to where I could buy it again and not risk very much. And that's really what the game plan is what I'm following. posted into Tiger TV here an ETF, which is the HUI. It's the Bulls Bears Index for the Bears and the Bulls, and we're at a very, very low level. We're down into that 150 and change level. We're right at a 1.618 retracement, so the risk here is extremely small. If you wanted to take a look at it, you can't risk more than $1 or $2. I'd say $2 at the most. So you're looking at about a 1% risk on this because it must hold that 1.618 or its history. The safer thing to do, folks, is to wait for it to turn, and then you can buy it at a higher price and put your stop under that low, and that's the safer of the trades. You don't have to try to be a hero and pick the absolute bottom. That doesn't happen very often, and usually when it does, you have to try it a half a dozen times. But this would be a place where you want to watch this. Have it on your watch list because everybody in the whole world has given up on gold and silver. And I really thought that there was a chance last week that we made that bottom because of the way we hit it. And we tested it again on Monday and Tuesday, and then, of course, Wednesday they took it apart really badly. And hasn't taken a new low out from yesterday yet, but we'll see. This is a full moon today, and so we're basically looking at what we think is a very important astro event, of course, because we watch full moons and new moons very much. And the theory on the full moons is you buy on the new moon, which was 14 days ago, pretty close to, the 15th? No, that was 18 days ago, but it bottomed on the 18th. Bottomed on the 15th, took off on the 18th, and here we are coming into the full moon here on the 6th with all kinds of emotionalism. The fact that, all of our employment is full employment now pretty much, and everything looks really great, and the Fed's going to keep interest rates low forever, and Japanese are going to buy stocks forever, and everything just looks so wonderful. I really think it looks good. The Bradley model, folks, it inverted back on October the 15th. We came off of those major numbers down there. We hit the 61% retracement on the S&P, the 38% retracement on the Nasdaq. All of those happened on the 15th or 16th. If you remember that day, we were commenting about that because the IWM, the small caps, were up on the day when the Dow was down over 200 points that day. The only time I'd ever seen that happen was in the bottom that we had on August the 17th of 2007. That was one of my very first TFNN shows that I was doing with Tom, and I remember that, very, very vividly. So I just think we have to wait and see because the Bradley is supposed to top on the 24th. That's when it basically went straight up from the 15th of October to the 24th, and that's what it says. But remember, this thing can invert at any time, so you don't really know. The safe trade is to wait to see, when it turns down. If we go below 2006 today in the S&P futures, that's going to be a weekly reversal. That means that everybody that bought stock this week is going to be underwater for the whole week. That's a very unusual thing to do. So if that happens, just pay attention to it. This is what happened to Baidu yesterday. It had a higher high and came down close below the lows, and that should be a lot of pressure coming into Baidu. Now, I haven't looked at it today. It's probably only up about $60, but, we have to see what's going on. Okay, we have to take a break, and then we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're online with Rich Anderson of Anderson Capital Management. Are you there, Rich? Oops. Maybe
I'm still here.
You there?
Yeah, I'm still here, Larry.
Hi, Rich. Sorry. Listen, thanks for coming on today. We really appreciate it, especially because we've had a lot of changes regarding margin requirements for commodity firms, CFTC
Rule 1.22.
Can you tell us what are the new, what basically is happening with margin accounts now for commodities? To just give them a little brief summary, if that's possible, because these are big events.
Right. It really was precipitated by MF Global going down when Corzine took that $2 billion. In any case, they call it the customer protection rule, but really what it is just get the margins in sooner. So now you've got 2+ days, from the time of the call, you've got 2 days to get your money in, and on the third day, at the firm I clear at least, they will assess you a penalty of 0.5% of your margin call. Now, for most of the listening audience, their calls are under 20,000. That doesn't apply. But if you have a big call, if you have a large position, you're going to have $500,000 swings a day. You've got to get that money in within a day. And
sure.
0.5% of 500,000 is quite a big penalty. So, it's a real motivator. But the world has changed. Everybody wants wires or ACHs, automatic clearinghouse. A lot of the firms that your listening audience use, they pretty much don't allow margin calls. You get on a margin call and they're just liquidating you. But on the firms that do allow them, the rules have changed, and that's what it is. 2 days and you start paying a penalty.
Rich, one of our listeners asked the question is why they're not the same margin requirements on stocks and equities like we have in commodities, and I believe it's because they're under different jurisdictions, aren't we? One's the CFTC, the other's the SEC. Is that how it works?
Well, the stocks are SEC item, and the futures are a CFTC item. But the real answer to that question is that when you buy a stock or sell stock, there's actually transfer of ownership. Okay. When you're buying or selling a futures contract, it's for a specific amount at a specific quality at a specific time in a specific place that the transfer will take place. So there's actually been no transfer of ownership until, say, the January beans until January, if you actually gave or took delivery. And therefore, the margins are much less because it's a promise, that something will be done at such date versus a actual transfer of ownership now in the securities. And that's the psychology, the logic behind why the margins are different for, Rule T, which is 50% margin for stock versus futures.
Mm-hmm. Rich, I know we haven't really had a problem with liquidity, or not a problem with the legal thing of the commodities except for Simplot way back in the late 70s when he reneged on his potato contracts. But is there any extra risk here with counterparty risk with some of these exotic things that they have traded now?
Not as long as they're exchange cleared. Where you've got problems is, like where you have off the books stuff, and so nobody's margining it, and I'm carrying it on my books as a profit, but it's really a loss. But since there's no exchange to market, that's where the problems have occurred, both in the, like in the energy business, but that also occurred in the bonds, with part of what caused the meltdown in 08, 09. They were carrying lots of underwater mortgages, and so that's a problem. By the way, there's another, the CME, generous as they are, has decided we're going to start charging everybody for real-time quotes, even the customers. So if you haven't heard about it from whatever your quote vendor is, you will be, and as a non-professional, it's not a big deal. It's $5 per exchange. That's $5 for the board, $5 for CME, $5 for COMEX, $5 for the NYMEX. But they'll give you a bundle deal of $15 a month. As a professional, it's much higher. But that'll be impacting your listening audience, too.
Mm-hmm. So
and
that's looking in the area around $5 to $10 a month based on both exchanges. Of course, you've got a lot of different exchanges now. You've got ICE and a whole bunch of them, so they could tack on another $50 to $100 without even being being important.
Yeah. So I mean, as a professional, you're used to paying it, but for most of your clients, they've been able to get away with it's been free for years, but now the exchanges are for profit, and that's a profit.
They certainly are. Rich, I have a question now. We've had a big rally here in grains over the last 5 weeks. We had about a 50-cent rally in corn, about a 70-cent rally in wheat, and about a $1 rally in beans. Is that pretty much over now? And harvest is pretty much getting along pretty good with our harvest moon today, isn't it?
Right, but a lot of this rally, and actually in the meal, you've had over $120 rally roughly. A lot of this rally has had to do with logistics, the rail cars. Mm-hmm. They couldn't get the grain to the processing plants, or the soybean meal from the crusher couldn't get shipped to the East Coast to the poultry or the pork production facilities, and so that has caused some feed wheat from Europe to be purchased to be brought into the Southeast United States, some meal to be purchased from overseas to be brought into the Southeast United States. And so when the rail logistics get cleared out, and we've got fairly large carryovers for next year, the next report on November 10th will verify that, I believe, it's going to be even more of a drag on the market. So it's really about the rail cars. We're moving so much of our rail car capacity is going to moving the oil out of North Dakota and other parts where they're doing the fracking. By the way, Denton, Texas, where fracking really was one of the first places started, voted against fracking close to the city limits in the election on Tuesday. Just a little side item. And the other thing that I think your audience would be interested in is that the Société Générale just did a analysis of the reweighting that's going to occur from S&P, the Goldman Sachs index and from the Bloomberg index, and things like cotton and coffee and cattle. There's going to be major, if a price goes up, you now have more of a percentage of your index is cattle. So come between, say, the 5th business day of January and the 10th business day of January, there'll be a lot of reducing of the cattle position and increasing of other positions. So that'll be a thing to keep an eye on early January.
Well, it's going to be interesting to see how much they can get cattle down, because that's had one of the biggest bull runs we've seen since sugar went to 66 cents back in 1966.
Right, but with the high dollar right now, last month as an example, exports were 12 million pounds less, exports were 8 million pounds less, and imports were 12 million pounds more. So as our dollar's strong, these people want to sell into the United States, and they don't want to buy from the United States because it's more pricey. So it'll be self-correcting, and you know how fast you can expand the production of poultry and hogs. And even within the cattle, if you look at the cattle kill, you'll see the cow kill numbers are down because they're keeping a few extra cows for another year, and the heifer, as a percent of the heifer-steer combination, is down as they're keeping back more heifers to be bred.
Rich, it's hard to believe it's been about 40 years since we first met. That was back in 75 when the CFTC first came out. And I don't remember the guy's name who ran the Board of Trade, and then he took over the CFTC. He was a very, very charismatic and tremendously talented individual. I cannot remember his name. I met him several times. But that was back in the days when the brokerage firms decided what your margin would be, what your commissions were. There was nobody. We had no one that they reported to. There was no one. It was all basically a handshake by gentlemen. And it worked pretty good for many years. And then with the CFTC in here and all the different things we have, someone mentioned to me, Rich, there's something like 250,000 different instruments that you can trade by using spreads amongst different things, and I would have to think that would be pretty close to it, because when I look at the CQG list of what's out there, it takes 5 or 6 pages just to find the one thing that you want to put up on your watch list, and it's really, truly amazing to me.
Right. There's just so much. It's all about making money. The exchanges are for profit, and so they'll come up with they'll come up with a contract for anything if they think they could get people to trade it. I find that you have to be a little more focused and try and specialize in a few areas.
Well, isn't that the truth? They have weather contracts and just about anything under the sun now. It's just really amazing what they have. That wasn't a pun, by the way, anything under the sun. That was just the fact that have you ever traded a weather contract, Rich?
No.
I have not either, it probably has very little liquidity. If you ever used to go to the Merc, they used to have a call out every day at 10 o'clock, anyone trading in butter, and a few of the old-timers would go over there and put on a contract. One guy would buy, the other guy would sell. They would wait a few minutes, and the other guy would sell, and the other guy would buy. They just didn't want to take butter off the exchange because it was one of the first things traded at the Merc back in the 1800s.
Right. It was just the marker board that they put their bids up on.
Yeah, the old chalkboards, that's for sure.
If you want to trade weather,
we want to thank you very much for having you on, and hopefully after we have the next crop report in 10 days, we'll have you on after that, and we'll see what's going on. I'll be broadcasting from Australia, but because of the internet connection, we should be able to do it pretty easily. So if you're available and have the time, we'll probably have you on again in another 10 days. Would that be okay?
Super. Look forward to it.
Because you gave us some great stuff to look at. I remember the bean call. You told us to sell the beans at $12.50 before they went down to $9 and change. So,
and the last trade I gave you was the Oxy's cattle, and that was a huge winner.
Yes, it was. It's like the restaurant business, Rich. You got to keep the food coming, or the customers don't show up.
You got it. Take care, Larry.
Hey, you bet, pal. We'll talk to you later.
Bye.
That was Rich Anderson of Anderson Capital Management, one of the real true professionals in the business, and a really nice nice fellow. I first met him when he was 19 years old in 1975, and it was a Squawk Box, and I happened to be a guest on the Squawk Box, and I talked a little bit about Fibonacci and Gartley and stuff, and he called me up, and a few days later he came out to California to visit me, and we've been friends ever since. I've watched his children grow up and grandkids and the whole bit. It's been a real pleasure knowing him. He's a real expert at this because they have a cattle feeding operation, plus they have wheat and sorghum out of South Dakota, where he was born and raised on the grandfather's farm. His brother still runs it, and they have quite a few acres there where they do farming and all types of different types of farming things along with cattle and hogs. They don't do hogs anymore. That's too capital intensive. But they do cattle, of course, and then they have their crops. But he knows the business, and he is really close with many of the super traders in the business because of his knowledge level is so good, and he really keeps it, really current. He goes to these meetings and meets the people that are making these decisions and stuff, and so it makes it very interesting, to the fact that he knows all this stuff. Okay, now the next thing we want to get to is we're going to have a break here pretty soon. Boy, the time's going really, really quickly. My game plan, I'll mention it again, is on the gold and silver. I really need gold to get back above the 1170 level. That's $27 from where it is right now. All we've been able to do is rally $20 off the bottom. We went from 37 to like 53, I think, $17. Silver was able to rally about 40 cents, but it's still, well under the $15.80 per ounce level that we really need to do to see it to get above that level. It's incredibly oversold, but we'll have to wait and see what's going to happen. One of the charts that I posted into the Tiger TV today was the euro. We're making some really important patterns today in the euro at that 124. Once we broke 125, as you can see, the 125 became the ceiling. We've been basically bouncing between 124 and 125, and any close below 124 should start this down into where our original target is for long-term positions in the euro is down around 110 to 105, and that could make the U.S. dollar even a lot stronger than it already is. So we'll have to look and see what it is. We'll have a break here pretty soon, but I do want to go over the stocks one more time because we're at a critical level today. I'm not on tomorrow. I won't be on until Monday. By then, the boxes will be floating out there in the Delaware River, and we'll see what's happened. I'll be going back to using the 200-day moving average and the cross of the 50-day moving average. I found that always to be very helpful in my trading, so we'll probably switch into that as Plan B approaches come Monday. But right now, it's in a really interesting part as far as looking at these patterns. See, I just can't see I can't find a buy pattern anywhere. I mean, we've had some big breaks in some of these stuff like Priceline and a few of these others, but to see a really clear buy in something other than a gold stock or a silver stock, it's just really hard. They're all completing major topping patterns, and whether this is going to be the top or not, I think so, because I've never seen this many expanding triangles, ever. And not only that, we're having a divergence between the New York Stock Exchange. We'll take a little break here. We got the Dow up, we got the S&P up, we got the Nasdaq up, and gold and silver down.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Folks, we're back, and I've had a request to take a look at the Bradley stock market model regarding that inversion that happened on October the 15th. As you know, the Bradley is very good at picking up dates, trading dates as far as whether they're going to be either high or low. It's a pretty good turning point. Now, remember, we have a full moon today. That's one of the more accurate things in the market. It usually bottoms on a new moon and goes up into a full moon. That's during bull markets. and bear markets, it usually does the opposite. But I think it's important to realize that we're coming into this time frame. The last couple of weeks, the last 2 weeks in November, are the two most positive weeks of the year. On a percentage basis, because basically what it does is holiday atmosphere, whatever it happens to be, statistically, it has a pretty big chance of rallying those last 2 weeks of the year. So we want to keep a good close eye on that, because that's when the Bradley model does make another big turn back on the 24th of November. We'll watch that closely. Now, I want to post the last chart for the day in here, which I think is the most important, and that is this divergence that we're having in the New York Stock Exchange Index versus the rest of the market. This is the third time this has happened. It's never happened twice before, and if this happens the third time, that's the same thing that we've seen many times before. So I believe it's very, very important. We have not taken out last week's high yet in the New York Stock Exchange Index, which was an exact 786 retracement. That's what we happened on the 31st on trick-or-treat day. So we'll watch that very, very closely. If we close above that, either today or tomorrow, then this probably is going to go up forever. And that'll be one of those times that I'll be able to tell my grandkids, well, at least I was with you when it went up forever. And that's what we'll have to look at. But we need the S&P to close above, I believe, 2035. And it's just going to be very interesting in here. I just haven't seen this many sell signals since 2000. We didn't get this many sell signals in 2007. We did in the indices, but not all across the board in everything in a lot of different stocks. I mean, this thing is, it has danger written all over it. I guess it's my danger, not yours, but that's what it looks like. It's just very, very negative, very, very negative patterns that are out there. And there's some of our favorites, which is the expanding triangle, the T6 pattern, the butterflies, the three-drive patterns. All of those are the ones that we're seeing, and those are the ones that are most statistically accurate, so you have to pay really good attention to it. Like I mentioned before, the key figure to watch between now and tomorrow, and Monday, of course, is the price of 2006 in the S&P futures. That equates to about 17,400 in the Dow, as I recall. 17,350 in the Dow. So any closing below those would be a weekly reversal. In other words, everybody that bought it this week would have a loss if it closes below that level. That's not a good thing when it has a weekly reversal, especially after a straight-up move like we've had since October 15th. This has been, one-way Corrigan. It's just been straight up. Like Basil mentioned, there's only been one dark bar. In all those bars, I think there's, 20 of them, and it's just been very little that anybody could do to get in. There's just been no corrections at all, and that's usually not how bull markets go. Bull markets climb a wall of worry, and they take a long time to get up there with backing and filling, and this one, the only filling it did was to fill up the shorts of the shorts themselves. So we'll see if that is going to be that's going to be the case this time. But the key figure to watch is 2006 in the S&P futures. If we close below that, it's a weekly reversal. Until that happens, it's probably not going to go down very much, but that remains to be seen. This is a very volatile time. And also the VIX index. With these last days that we've had, to the upside, triple digits again, the VIX index still hasn't taken out the weekly low. So live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.